Today is the 21st of September, and it is Wednesday. The year's 2011. The pattern is still that of lower highs as well as that of lower lows. Each one thus far has been lower than the previous. The trend has yet to have changed within a primary neutral trend on this quarter date time frame. As I've mentioned yesterday, you need to see a higher one or the other, either a higher high or that of a higher low. Because if that happens, then that increases the chances that you can really reverse the trend. Whereas, say we come down and find a low at 39.45, and next thing you know, we don't have to go as far higher to break the previous high. And within a trend of lower highs and lower lows, then what the constant is that point A to point B on the downside is always going to be bigger, basically. But you have a situation where, for example, you have that higher low, then all of a sudden this point wouldn't be as long as something like that. I spent a lot more time on this chart. I really wanted to segue in, talk about it for like 20 seconds, and then move on. So I did 90 seconds on that. So let's now move on. And what I want to move on to is the more longer term silver chart. And I've heard a lot of people talking about how silver takes the stairs up and the elevator down. And let's take a look at how many times since 1968 that the market has, instead of taking the stairs up, has decided to take the elevator up in one, two, even three, four, five. I don't know if I want to count that or that. Six, seven, and eight. It does it quite a bit. So to think that the market always has to grind its way higher, which it can do. No, 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 that's not the case. Now, what I decided to do last night was I did something like this. I just destroyed about the majority of the chart. And then I took the pieces that I deleted and I just put them in different places, and then let a random number generator decide which of these do I take first. Then I plotted them all together. So let's see what the plot gives us. Fake years at the bottom, although they pretty much would have matched up the same. And within this example here, using exact movements but putting them in different spots than they actually occurred, then it started this chart off with a big wild move that's seen silver go from $1.90 to $9.50 an ounce, which was the 1980 spike. What would occur then? And maybe something would happen like the Nixon shock, and that's what make this happen. And no, we end up having a situation where we have sideways action, or a situation where we have a big high and a big low, and it takes forever to break above that level. But if we were seeing a situation like this, what would people be saying right now? Would people be very bearish within the silver market? However, this is just merely another way of showing price action. And if you were to do the same sort of deal within the Dow Jones or any of those types of things, it would show you a lot of the similar sort of things, that overall it's going higher. That's the trend. But the question is, why is the trend going higher? And well, everybody has different reasons. Mine, I think, is very much common, as well as that of what it's priced into, because these are fiat currency notes. Alright, now let's segue back towards here. And the big number is this number 3811. I said a long time ago how important this number and this 42 and a quarter level is. which really reflects the range in here. So it's had brief periods trying to get above the range, but has not done so. So you can give me all you want about what Clive is saying about the markets going lower, or even that matter that the stock market's going to crush and, well, it's going to go lower. And you can even do something I looked at this morning and see signs that copper just may go down to $2.90. And if that's the case, what's that going to do to the price of silver, although they don't always trade together? But I want to focus on that 3811 and segue into the actual raw data within the daily time frame. Okay, what we see here are the dates. This is May the 5th, and we have, this is right after the market took its plunge lower. We have the open, a high, the low, and the close, and there we can see silver's at $33 on May the 17th. We know at this point, we knew even at this point when it was 32.34 on May the 12th, that the high was 49.81 and the low was 32.34. Therefore, we could calculate that Fibonacci for that of the 38.11. That was the big level that it needed to get above to say, stop this bearishness once and for all. And well, it was really the 25th of May where it came up to 37.98, only a 13-cent difference. So now how is this level going to hold as resistance? And we can see there it's resistance here we can get above it. It's stabilizing at it on May the 30th, and it's still there June the 1st, and boom, now it goes lower. So 38.11 was resistance the first time it was there from May the 21st to June the 1st of this year. Then the market went lower. We see the 35 on June the 15th, $36 high. It's down. Are we obviously breaking 32 and a third means we got bad times coming, but that didn't happen, and we're still lower. We're 38.11's that big level, and boom, there we are, right there, June the 13th. On June the 13th, we opened the day at $36.11. We went as high as 38.32, and it closed above that mark, 38.20. Well, since that point, we can see that it's staying above 38.11. In fact, if we look at all the 40s in a row, well, not anymore, it has stayed above 38.11 for quite some time. That August the 5th was the last day that it traded below it, and even then, it's the only day it has traded below 38.11 going back to July the 15th. Not only that, if we take a look at today our high is $40.43, which means we continue the streak of so many straight days above 40. Because the last day silver did not get above 40 would take us all the way back to August the 15th. So it's been over a consecutive month where silver has not went or stayed below 40 for an entire 24-hour session. Therefore, when we take a look at this situation in here, there is absolutely no reason, despite the fact of these lower lows and lower highs, for me to have any bearish conviction whatsoever until I find some sort of confirmation break below 38.11. For me to get bullish, I need a confirmation break above 42 and a quarter. We've had breaks above it. We have not had confirmation breaks, because you get above 42, you don't find support and lift higher, although you kind of did, but that was about it. You need this line in here. You need to go up and find some support, and now you're ready, off, going, and completely bullish at that. Okay, thank you for tuning into today's technical analysis 10-minute video. Take care.